Bitcoin exchange-traded funds, or ETFs, have been making the news recently after the launch of the ProShares Bitcoin Strategy ETF, the first US Bitcoin futures ETF in October 2021. Its launch saw one of the biggest first days on record for ETFs, raking in $550 million of investment. However, is the rise of Bitcoin ETFs good or bad for investors? In this video, we'll consider their advantages and disadvantages compared to investing in Bitcoin directly. Also, will Bitcoin ETFs impact the price of Bitcoin positively or negatively? This video is brought to you by I Dream of Money, the channel bringing you videos about business, economics, and money. Help us reach 1,000 subscribers by clicking on the like and subscribe buttons so you never miss out on a video to help you become a better investor. How do Bitcoin ETFs work? An ETF is an investment in a vehicle that is listed on a stock exchange, which tracks the performance of an underlying asset or a group of assets. One of the most popular types of ETFs are ETFs that track a share price index. A Bitcoin ETF is meant to track the price of Bitcoin. The way it does this depends on whether the ETF is a spot or futures ETF. A spot Bitcoin ETF will actually go out and buy Bitcoin on the blockchain and hold this in cold storage. Therefore, its price should closely track the price of Bitcoin, as aside from the management fees charged, it is holding the physical Bitcoin. An example of a spot Bitcoin ETF is the Purpose Bitcoin ETF listed on Canada's Toronto Stock Exchange with the ticker BTCC, which was the world's first physically settled Bitcoin ETF. On the other hand, a futures Bitcoin ETF is not actually holding any Bitcoin. It is holding futures contracts, a type of derivative instrument. The ProShares Bitcoin Strategy ETF is an example of a futures Bitcoin ETF. As it states on its website, the price and performance of Bitcoin futures should be expected to differ from the current spot price of Bitcoin. This is because a futures contract allows you to purchase Bitcoin at a future date at a particular price, which is not necessarily matched in timing and price to the underlying Bitcoin. What's more, there are additional costs involved in acquiring and rolling forward derivative contracts. Futures ETFs can also suffer from the issue of contango. Contango is a situation where the futures price of a commodity is higher than the spot price. This is because a futures contract can sometimes price in the expected future performance of the underlying asset. This means that investors can lose money when the futures contracts expire higher than the spot price. One of the key advantages of Bitcoin ETFs is that they are more accessible than holding actual cryptocurrency. Institutions and pension vehicles in particular often have strict investment mandates that do not include dealing directly in cryptocurrencies, as they are legally distinct from shares and ETFs. This could allow you to gain exposure to Bitcoin where you otherwise couldn't, and may also potentially have tax advantages depending on the structure you invest through. ETFs might also be a better choice for people who aren't prepared to put in the time to research the best and most secure exchanges and the ways to store their Bitcoin. However, that is probably where the benefits of Bitcoin ETFs end. As a retail investor, you could easily go on a cryptocurrency exchange and buy Bitcoin just as you could buy a share in a Bitcoin ETF on a stock exchange, with lower fees and greater control over your Bitcoin. Often the price of the ETF may be higher than the value of the assets underlying it. For example, the Grayscale Bitcoin Trust was often trading at a premium to its underlying net asset value. Also, as mentioned, a Bitcoin ETF will also not necessarily track the price of Bitcoin, as it isn't the same as holding direct Bitcoin. You would not only be exposed to the price of Bitcoin, but also the risks associated with the futures contracts themselves, poor management, and supply and demand for the ETF stock itself. If you're keen on investing in a spot Bitcoin ETF, it should also be noted that there aren't many approved spot ETFs around the world, including in the US. This means that you might also have to take foreign currency risk by investing in a non-local stock exchange. So are Bitcoin ETFs a good or bad thing for Bitcoin prices overall? An increased interest in Bitcoin would seem to be a good thing, as it indicates growing acceptance of Bitcoin in the financial community, thereby increasing demand. Spot ETFs would need to go out to buy more and more Bitcoin to meet this demand, increasing the price of Bitcoin due to its limited supply. However, Caitlin Long, a Bitcoin and blockchain expert who is the founder and CEO of Avanti Financial Group, has argued that the use of futures in Bitcoin ETFs might actually only serve to reduce the price of Bitcoin. The demand for exposure to Bitcoin that might have otherwise pushed up the price of on-chain Bitcoin if those investors had bought Bitcoin directly is instead being soaked up by these ETFs. Therefore, the jury's still out as to whether Bitcoin ETFs will impact the price of Bitcoin positively or negatively. Let me know in the comments below whether you think Bitcoin ETFs are good or bad for Bitcoin. If you like this video, please remember to like and subscribe to this channel. Thanks for watching, and until next time.